You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 14th day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the very top of the page, you'll see a link that says 5-day free trial, no credit card required. Click the link, fill out the little registration form. Make sure you get it right because it's an automated process. You want to make sure we actually get it. And then in most cases, same day, we'll get your desktop set up, get your indicators indicating. And since today's Friday, your trial will officially begin on Monday. But you'll have access to the indicators over the weekend, and some markets do trade over the weekend. So you'll have some time to kind of familiarize yourself, and then your 5-day free trial will be next Monday through Friday. Now, if you're not listening to this broadcast live, if you're listening after the fact, never worry about what day of the week or weekend or hour of the day you sign up for the trial. You will always get 5 consecutive trading days, even if it stretches over a weekend. So really, I guess we should call it a 7-day free trial, but we've called it a 5-day free trial since 2008, so there you go. Okay, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break, and we come back for the afternoon broadcast, which begins at 12 noon Eastern. Now, there's 2 different ways to join this afternoon broadcast live. The best way, go to mytradingiq.com. You only have to do this once. Scroll down to where it says afternoon broadcast, click that link, fill out that 30-second registration form. You're done. Going forward, what will happen every trading day, you'll get an email about an hour before this broadcast starts. Inside that email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. During the second hour of the broadcast, you can also ask questions via the YouTube channel. Now, there's a couple different ways to join the afternoon broadcast live. I just gave you the best way. But there's going to be days when you're out of the office, away from the desktop, and you still want to join live. You can. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do that too. I am, of course, talking about our YouTube channel. It's easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so really all you got to remember is CFRN. Not only do we broadcast live every trading day, as we're doing right now on our YouTube channel, we're simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick days at random. Watch a little bit, fast forward a little bit, pick another day, do the same thing. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. So, we'll get started as we do each day with our daily devotional, word of prayer, go over some news. We'll begin the recap of the alerts, both the logic and the concierge. About 12:45, 12:50, Michael will join us, give us a recap of what happened today in the live trading room. And then we'll go live at 1 p.m. Eastern on the TradingView platform. Do some live trading for 30 minutes. And then I'll come back, finish the recap of the alerts if I haven't already, and then wrap things up with our good word for the day. So there you have it. Let's get at it. The topic of the devotion, which we began yesterday, the air I breathe. Now, there's a great song called Simply Breathe. Michael W. Smith, as I said yesterday, I don't think anyone does it better. This is the air I breathe. I won't even insult you with my singing, but if you've never heard it, my goodness, go listen to it. Okay, today's scripture, Colossians 1, verses 15 through 18. I'm going to share it with you from the Message translation. We look at this sun and see the God who cannot be seen. We look at this sun and see God's original purpose in everything created. Now, of course, that's sun, S-O-N, not S-U-N. For everything, absolutely everything, above and below, visible and invisible, rank after rank after rank of angels, everything got started in him and finds its purpose in him. He was there before any of it came into existence and holds it all together right up to this moment. And when it comes to the church, he organizes and holds it together like a head does a body. Now, yesterday we started talking about worship. And a lot of people, especially those that are, non-believers, they just don't get the worship thing. You have a God so egotistical, you have to worship him? Isn't that kind of petty? Well, no, it isn't. It's an incredible experience once you understand the freedom that it brings. So, why do we worship? I explained yesterday that's just how man is wired. You're going to worship something. So be careful what you choose. Right now, all around you, people of all shapes and sizes, people of every age and purpose are worshiping, continually making decisions on where they'll direct their attention and affection based on what they value most. Some forms of worship are found outside the walls of the church and have no reference to the God of all creation. All you have to do is drop in on a concert at the local arena or go to a sporting event at a nearby stadium to see amazing worship. And people are going for it, lifting their hands, shouting like crazy, standing in awe, declaring their allegiance, painting their bodies. Interestingly, these venues are filled with the same forms of worship mentioned in the pages of God's Word. The same expression of worship that God desires and deserves. The compelling question for me is, why? Why do we crave something to worship? Why are we so insatiably drawn from idol to idol, desperately in need of something to champion, something to exalt, something to adore? I mean, men go out and buy jerseys with the name of other men and proudly wear them around. Now, I'm not knocking sports. It's just not my thing. I wouldn't do that. But would I buy a polo shirt manufactured by Ralph Lauren? You know, the Oxford button-down collar with the little pony? Yeah. I don't worship the shirt, but I love the shirt because it's high quality. I have those types of shirts that are 20 years old. And they're so well made, they're almost as good as the day I bought them. So, just don't want you to, I'm not trying to say I'm better than anybody else, but I'm not worshiping that little pony on the shirt. I just know that that little pony represents incredible quality, unless you buy some knockoff at a swap meet or online. Be careful. There's a lot of that out there. How do we know for sure that some things are more important than others, more worthy of our worship? How do we even know that value, beauty, and worth exist? I think it's because we were designed that way. We were made for God. The Bible says it this way: all things were made by Him, and all things were made for Him. You've been created by God, and if that wasn't enough, you've also been created for Him. As a result, there's an internal homing device riveted deep within your soul that perpetually longs for your Maker. An internal Godward magnet pulling your being toward Him. Stamped in God's image, we know that there's something we attach to, something we fit with, someone we belong to, somewhere called home. That's why we come from the womb equipped for connectivity with God, pre-wired to praise. And that's why, from the youngest age, we begin to worship. We arrive in this world as objects of divine affection, miraculous receptors designed to bring Him pleasure. If only everyone could know we've been created by and for God. If only we could all comprehend that we're precious to Him, housing mirrored souls designed to reflect His glory. Think about a time in your life when you noticed God's magnet drawing you to Him. Join me in a word of prayer. Heavenly Father, we come before you in awe of your majesty and sovereignty, as we just read in Colossians. Lord, we thank you for Jesus, the image of the invisible God, through whom all things were created. and in whom all things hold together. Praise you for his supremacy over all creation and his leadership of the church. Help us to live our lives with the knowledge that everything is created through him and for him. May we honor him in all that we do and recognize his authority in our lives. It's in Jesus' name, believe and pray. And everybody said, amen. Amen and happy Friday. Let me give you numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. All right, the Dow is down 102 points. The NASDAQ is down 21. S&P 500 down 13. But the Russell 2000, our man in the street, is down 37 points. That's almost 2%. The other indices, they're down only 0.25%. Now, we know that no one index always leads the others. But we do know that sometimes the Russell, which is based on 2,000 small cap companies, sometimes it can give us a little bit of a hint as to what direction the market is headed. And again, the Russell's down 37 points, which for the Russell is almost 2%. And the commodity basket, crude oil, is off 2 pennies, trading 78.60 last. Gold up $28.30, trading 23.46 last. That's a gain of 1.25%. Silver up 40 cents, trading 29.47 last. That's a gain of almost 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 94 points. The Shanghai rose 3. The Hang Seng dropped 170, almost 1%. And in the European markets at the close, FTSE down 16. The DAX down 263, 1.5%. The CAC fell 204 points. That's over 2.5%. So we had a mixed day in Asia. It was a red day for the UK. And so far, it is a red Radio Friday here in the US of A. Now, let's jump through these news articles real quick. U.S. stocks pulling back on Friday. Now, this article was written at 9 a.m. Eastern this morning. Just keep that in mind. U.S. stocks pulled back on Friday, signaling a retreat from all-time highs as European turmoil rattled nerves and Elon Musk's pay package when thrust Tesla center stage. I forget who it was, said that Elon Musk, it might have been, was it the Supreme Court, that Elon couldn't get paid all that money out of a public company, but the shareholders held a vote. I think it's like, I don't know what maybe it'll tell us in this article. But the shareholders voted to give him his money, as they had agreed to. Stocks are losing steam after the benchmark S&P 500 and NASDAQ nailed record closes for the 4th day in a row. Okay. Now that's closes, not daily highs. When we go to the chart, okay, see, they're talking about the closing price, and that's different from the high of the day, okay? So you'll see it when we go to the charts. A surprise cooling in wholesale price pressure gave heart to investors betting on 2 interest rate cuts this year, since the decline is likely to be reflected in the coming PCE inflation reading watched by the Federal Reserve. But the Fed this week dialed down its projected rate cuts from 3 to 1 in 2024, keeping the market guessing and leaving stocks vulnerable to shifts in mood. Strength in technology names has driven broader gains, setting up the S&P 500 and the Nasdaq for weekly wins. Dow faces a loss for the week as questions persist about the breadth of this year's rally. Meanwhile, Tesla shares were down nearly 2% Friday after shareholders reapproved Elon Musk's pay package. Despite opposition from some large investors, 77% of votes were cast in favor. Weighing down spirits was a slump in European stocks, which were headed for their worst week since October. Investors are concerned about the fallout for markets if the far right makes political gains or even wins France's snap election. Okay. How much money is Elon going to get? Let me look here. See if I can spot that. How much money we talking? 72% of votes cast by shareholders, excluding Musk and his brother Kimball, they didn't get to vote, were in favor of a $56 billion, that's B as in billion, compensation package that was awarded back in 2018 and then voided this year by a Delaware judge. That pay plan is now valued at roughly $48 billion. The pay pack received 73% support when it was first granted 6 years ago. We're talking about, we're in 2024. 6 years ago, he got paid this money based upon the performance of the company. And then some judge says, oh, no, you can't make that much money. Shareholders have now said, yes, he can. Amazing. Okay, I've been talking about this for a while. U.S. home sales in May fell to among the lowest levels in the past decade. I'm going to say it again because I've been warning everybody about this. U.S. home sales in May fell to among the lowest levels in the past decade. That data came from a Redfin report as both demand and supply remained sluggish in a high mortgage rate environment. Now, why is it important? Housing affordability in the U.S. is at an all-time low. All-time. Since the beginning of recorded history. Median home prices have scaled record highs, and the 30-year fixed mortgage rate is hovering at around 7%. This has depressed both demand and supply. Home sellers are holding on to lower fixed mortgage rates secured on properties during an era of cheap debt in the face of higher rates currently. In May, 407,959 homes were sold. Only October 2023 and May 2020 in the past decade have recorded fewer home sales than last month. Guys, remember 2007? There was 3 houses across the street from me. All went into foreclosure. I bid $100,000 on them. I was, lowballing. I lost every one of them because somebody else offered $10,000, $15,000, $20,000 more. Those houses since 2007 have tripled in value. Don't I feel like a schmo? Now, is it going to get that bad again? It could get worse. Okay? By the time the Fed starts pumping the brakes, the car has already gone off the cliff. So, If you have a fixed rate mortgage at a low rate, that is a very valuable thing that you have. Hang on to it. The stock market is ending the week on a sour note after disappointing U.S. economic data, with traders also shunning riskier assets amid worries that a political crisis in France is deepening. Traders rushed to the safest corners on the market on Friday, with French shares this week losing roughly $200 billion in market capitalization, basically the size of Greece's economy, following President Macron's decision to call a snap election. The nation's bonds were at the heart of the rout, with the premium that investors demand to own 10-year debt over safer German peers heading for the biggest weekly surge on record. Yikes. How about that beef price? Been to the grocery store lately? Now, for those of you that have an interest in ag products or pork bellies, American hog farmers are betting that cash-strapped consumers will grill more pork and eat more pepperoni as beef prices surge, feeding a turnaround for an industry that's been struggling for more than a year. You might want to take a look at pork belly futures. In fact, maybe I'll prepare a chart for you over the weekend. The smallest U.S. cattle herd since the 1950s is making beef too expensive for shoppers who have seen prices climb month after month and mostly exhausted savings from the pandemic. With a lot of pork to go around, producers are now banking on consumers ordering more sausage and pepperoni pizzas and on rising demand during the grilling season with the July 4th holiday approaching. Pork producers have been under pressure as meat demand hasn't kept pace with supplies, and higher crop prices made it more expensive to feed herds. Still, attendees at the World Pork Expo in Des Moines, Iowa last week expect the industry's fortunes to start turning, with more demand giving them the bump needed to further improve margins. I never thought I would encourage people to take a look at buying pork bellies. You can buy, if there's a symbol for live cattle, there's one for pork bellies. We used to look at them from time to time. I even forget what they are now. Maybe when Michael comes on and we bring up TradingView, we'll take a look at the prices. And a lot of you guys like options, and this may be a great opportunity. I'm not advising you to buy pork. I'm just advising you to take a look at it and see if it makes sense for you and your portfolio. And here's another one. Orange juice prices have always been volatile, falling when bumper harvests create an oversupply of oranges and rising when frost or a hurricane knocks out fruit trees. But the record high prices the world is seeing for OJ right now may be on the table for a while, since the diseases and extreme weather ravaging orange groves in some top producing countries aren't easily resolved problems. I went to reach for some orange juice at the grocery store the other day. It's like $7. I said, nah, I'll pass. This year's harvest in Brazil, the world's largest exporter of orange juice, is likely to be the worst in 36 years due to flooding and drought. Concern isn't just that the price of juice is going up. The concern is not having juice at all. In the U.S., Florida's already diminished orange production fell 62% in the 2022-2023 season after Hurricane Ian further battered a crop that was struggling due to an invasive pest. Drought also cut Spain's orange production last year. Scarce supplies have sent prices soaring. In the U.S., a 12-ounce can of frozen orange juice concentrate costs an average of $4.27 in April, 42% more than during the same month a year earlier. Wow. And that's frozen concentrate. My grandmother used to buy that, but if I'm going to buy it, I like to buy it ready to go. As the price gets high, people do consider other alternatives. Global orange juice consumption was already declining before the current price hikes due to competition from other drinks and public concern about the amount of sugar in fruit juices. That's an important point to make, okay? Just because you're drinking apple juice, just because you're drinking orange juice, doesn't mean they have insane amounts of sugar in them. It's naturally occurring sugar, but too much sugar, you know. I remember when I was a kid growing up, if somebody got the diabetes or got diabetes, people would say, "You hear about Fred?" No, what happened to Fred? Got the sugar. That was a country folk way of saying he had been diagnosed with diabetes. He got the sugar. Oh man, I'm sorry to hear that. Last year, McDonald's in Australia removed orange juice from its menu in favor of an orange fruit drink that contains 35% orange juice. So that's all the news fit to print. Let's go to Logic 247. This is our 24/7 around the clock E-mini alert service. Not just E-minis, but also crude, gold, silver, euro, bonds. It's been 306 weeks since we rolled out Logic 247. Over those 306 weeks, we have issued over 16,900 individual handcrafted alerts. And we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders. Now, on a Logic alert, this is unlike what you see in the live training room in the morning. This is more discretionary trading. The maximum risk on a Logic alert is $300 per contract traded. On the ES, that would be 6 points at $50 a point. Now, that doesn't mean you risk $300 on every trade. You use the structure of the market to determine where the stop needs to be. And if it's more than $300, you kick it to the curb. Also, there has to be at least $300 of potential profit in the trade to risk the full 300. Let's say you're only going to the first target or only going to the second target. You never risk more than the profit you hope to take from the trade. Okay, so when Valerie did the recap this morning at 7 a.m. Eastern, we had issued 63 alerts this week since the markets opened last Sunday night. One never triggered, still waiting on 11. That gave us 51 actionable alerts, of which 5 or 10% would have been stopped out, again, based on market structure. And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. So 10%, that's a great week. Again, the average over the last 306 weeks, 16,900 alerts, 20% or less on a weekly basis have been stopped out. So, and of course, our traders have access to the alerts as soon as they're published, and they're always published before they trigger. And once the week ends, then that information falls into the public domain. So if you wanted, you could, if you took the trial, you could go back and look at all 16,900 plus alerts, all 306 weeks. Now, obviously, you got to be on the trial or a member to have access to the alerts before they trigger. But again, once the week ends, anybody can look at them. It's just history. Now, 306 weeks is a long time, but long before we had the logic alerts, we had the concierge trade alerts. Now, they're different in a couple different ways. The logic alerts have an entry price, an initial target designed to help you get your goal for the day, and then multiple targets sometimes, which comes from me looking left for previous swing highs and swing lows. This is where you learn to read the chart, okay? If you do what I explained to you to do, within a couple weeks, you'll be able to spot the windows of opportunity, the entry points, the targets, the obstacles, everything, okay? Now, once you nail that, your next step is the CTAs, the concierge trade alerts. The logic alerts can come out anytime around the clock, 24/7. Because futures trade around the clock and we have traders around the globe. But the CTAs are published as a static report shortly after the Globex open. So we know this is the Friday session, but Friday began last night at 6 p.m. Eastern. So 5 minutes after the markets opened, all of our members and trial members had all these targets. First thing you do when the report comes out is you make a note of where price is or was at this time on your 30-minute chart of the markets you actually trade. Once you do that, make a line in the sand at the long target, a line in the sand at the short target. All alerts, logic and CTAs are created on the 30-minute chart. Nothing magical about a 30-minute chart. It's just the one I chose to use years ago. And if it ain't broke, leave it alone. Now, if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is the green line you'll see on all my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you're looking at. You can put it on a daily, weekly, monthly chart, 30-minute chart, 5-minute chart, tick chart, range chart. But for the purpose of the alerts, we use it on a 30-minute chart. Now with the logic alerts, I look left for you, but with the CTAs, you learn to look left yourself. And you learn how price behaves at a weekly trading zone. The zones come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members every week since December 14th of 2009. Almost 15 years come this December. Will be 15 years. Beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's go see which way the wind's blowing. Okay, now today is the last day you'll see the M contract. We will be rolling forward to the U contract. So all the alerts that come out Sunday night will be ESU 24, YMU, NQU, RTU, 6EU. All the indices and the euro I will roll over the weekend to the U contract. Okay. All right. So we know we had that daily doji yesterday where we This was the all-time historic high, June 12th. June 13th, we put in a slightly higher high, lower high. And we found support at the 50% fib extension right there. So we had an inside day. Right now, we're having an I was going to say an inside day of an inside day, but that's not true. Today's low is down at 53.97.75. So we spiked down to blue and climbing. Now, obviously, the 50% fib extension was the first area for potential support, then the step line, then blue and climbing. It made it all the way down to blue and climbing. Now buyers have come in and bid it back up to just above that 50% fib extension. How we close today will be very important. If we close below blue and climbing today, then Sunday night you should probably look for a drop to the daily BBC, which is also the 24% fib retracement from the low of April 19th to the high of June 12th. Bull bear cross, BBC. Bullish above, bearish below. Bullish above. Okay? Again, it's always relative to whatever time frame you apply it to. Now, all alerts are on the 30-minute chart. The reason we're looking at a daily chart is because institutional traders, because of their incredible account size and the size they trade in, they're the ones who actually move price. So, if you'll learn, if you'll train yourself, make it part of your routine, each day, spend 2 minutes with the daily chart of whatever you're about to trade on your smaller time frames. Over time, you'll see how much that benefits you. Okay? Now, at one point today, we had a big red candle all the way down, but we knew where to expect support. And when that support came in, okay, this was a red candle all the way down to blue and climbing. But as buyers came in and bought, it takes financial commitment for price to rise. So a whole lot of buying going on, but we still have a red body on that candle. And the high is slightly above the open and close of yesterday. But the open. The high is, but the open, today's open, it's right at the open and close of yesterday. See that? Okay. So you know where support is. Now, if we get below blue and climbing, then the next support is the 38% fib extension, then the 24% fib retracement, and the BBC. That's support times 2. Okay. Now the 62% fib way down here, retracement. There's a bullish cross right there. When the blue line gets above the green line, first time price revisits that area, will almost always be good support. The same is true of a bearish cross, like this. Created this resistance yesterday, but for a couple days. 1 day, 2 day, the 3rd day, we finally plowed through it. Okay? It's real important. Now, the vertical line separates today, Friday, from Thursday. Back here is Wednesday. When price drops to a weekly zone, we expect support. When price rallies up to a weekly zone, we expect resistance until proven otherwise. This was that CPI report the other day that sent the market substantially higher. Here's where we opened last night. We had blue and climbing overhead. That's potential resistance. So we were never able to make it to the long target, nor would we be inclined to even trade towards it. When blue and climbing turn to red and falling, see the bearish cross there? Red line gets below the green line. This candle opened at 54.33 and it dropped 23 points to the target. It's well over $1,000 per contract traded. Price dropped to the zone. We spiked it, but it held as support. Support will always send the market looking for resistance, BBC. Resistance sends us looking for support, blue and climbing. Back to resistance, back to support. Now we're trying to overcome this double top right here. If we can, and the market moves higher, be very careful as price approaches 54.35. Why? Because you got a bearish cross there. And the first time up, that will almost always be good resistance. Okay? All right. On the Dow, here's where we opened last night. Kind of the same story. We get below the BBC. We trade through this zone. We hit the target, and we keep going. If you look left, you'll find out why the market found support there. Okay. When price rallies up to a zone, expect resistance. When it drops to a zone, expect support. Resistance, support. Right now, resistance. 70% of the time when price encounters a zone, it will consolidate. 20% of the time, it'll get rejected. 10% of the time, you'll get the slice. That's when on the 30-minute chart, price slices through a zone like it's not even there. When that happens, when the slice runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. On the Russell, we opened last night below the BBC. So there was never any reason to think about the long target because we never got above the BBC. Remember, bullish above it, bearish below it. So down we came to the zone, consolidated a little bit, and then dropped to the tick to the target. Support gave us a little bounce. There, see it? So we came, this was red all the way down. 2027. And then that support bounces back up to 2030. Yeah, 2030. And then we continued down to the next zone. Now the next zone, that was a slice. When the slice ran out of steam, price retraced back to the zone it sliced through and then continued in the direction of the slice. And look where the market has found support. Support, 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 support. Where did it find resistance? Resistance, resistance. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. For all of our members and all of our trial members. Once you understand how price behaves at a weekly zone, they'll become one of the most important tools in your trading toolbox. Again, these zones were published Monday morning. Here it is Friday. Still doing their job. On the NQ, here's where we opened last night. Above the BBC, ran right up to the target, consolidated at the target, got below the BBC, and dropped to the weekly zone, which held as support. See, we needed to break these lows over here. See it, this low? That was established yesterday. This is Thursday, this is Friday. But look at that. Isn't that amazing? Happens every day. You should let me teach you. Okay, so we come down to the zone, find support. Support will always send the market looking for resistance, which it found at these highs from earlier in the session, and those highs found their resistance from this high created yesterday. Isn't that amazing? I think so. So now what are we doing? Well, we're above the BBC. We've got blue and climbing, so the market's going to probably attempt higher prices. So at 19,686, be careful. There's potential resistance there. Okay. Crude oil. This was the open last night. It was 5 minutes into the life of this candle that the CTAs came out, but we didn't get to the short target. But this candle right here opened at 77.96 and dropped to 76. That's a $200 per contract candle. Then price pulled up to the zone, consolidated for quite a few hours. And then about 5 a.m. this morning, off we go. Now these highs right here, see these highs? See that bearish cross? When you have a bearish cross that leads to an extended move, when price revisits that area, expect resistance until it finally breaks through. We hit the long target. The step line crossed blue and climbing. That means we're going to pull back to the BBC, which we did. We spiked down and touched the zone support, but the pullback to the BBC held. Pullback holds more often than not, whether it's pulling from above or pulling from below. It holds more often than not.
Yes.
And here's Michael. So we will pick up with gold. Right now, Michael's going to give us a recap of what happened in the live training room. And we'll go live on TradingView for 30 minutes, do some live trading. Then I'll come back, finish the recap, and wrap the week up with a good word for you.
Yes. Excellent.
Looks good.
All right. Thank you. Here we go. All right. Good afternoon, everyone. Today is Friday, the 14th day of June, 2024. If you have not taken a free trial with us, go here to mytradingiq.com. Right here in the purple thing, click on that. And that is going to bring you to a registration page that I need to update right now. Hold on, if I just do this right now. Okay. While that's updating, the registration page is going to look something like this. All right, but it's going to have all the next week's stuff when it's updating. I'll get back to that. Still publishing. Okay, it is published. Here it is. You can view it now. All right, we'll look at it there. And here it is, all of next week's stuff. Now, next week, just a reminder, Wednesday is Juneteenth. Juneteenth. That's a holiday. So we only work Monday, Tuesday, Thursday, Friday next week, okay? But we will be here regular time, Monday morning. Everything will be going out Sunday night the way it always does. Sunday, Monday, all that stuff. Everything's going to start up normal next week. All right. And then on a Wednesday, they're just shut down, is what I'm told. Completely shut down. If you take the trial, all you have to do is go, like I said, go here to mytradingiq.com. This one right here, mytradingiq.com. Click on this button. It's going to bring you to this registration page. Just fill it out. All right. So for today, our results for today. What month was that? This is this month. All right. We had better luck today with our DOMs. I had to do it the way that I used to do it before I figured out the whole thing with the strategy. And it still works exactly the same as it did before I figured out how to do the thing with the strategy. And I was told that the strategy thing is going to be fixed over the weekend. So that's all good news. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 14th day of June, 2024. We made 28 ticks on the NQ, 36 ticks on the Russell, 8 ticks on the YM, and we lost 6 ticks on the ES. That put us at plus 285 in the morning session. Today it took 40 minutes and 12 trades to get to $2,700, and we took a total of 20 trades this morning. So on a month now, we're up $3,327. It's over 9 business days, averaging $369 per contract per 2-hour business day. On the year now, we're at $43,817. That's over 111 business days, averaging $394 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, beginning this year, if you did that with me beginning this year, you would have had to work 41 and a quarter hours almost, and be averaging $1,238 an hour, right? If you were to start with me at the beginning of last year, you'd be 18 contracts now, and you'd be averaging $5,912 an hour, working the same 41 hours, $5,912 an hour. That was over 6,100 yesterday, but before yesterday. I had a 1 contract day yesterday, and it took a long time to get the goal with that 1 contract, because I stopped out twice in the beginning and made mistakes. Anyway, I recovered. Let's get into what we did today. All right. These are all rolled to the U contract right here. All right. I don't know that I'm going to have everything that I did on all the charts, and I know it's not being in the right places. Even if it is in there, it's not. It's not. The stuff that I did this morning isn't even on the charts. So I'll just tell you what we did. Okay. We can go through what would have happened if we had done it on the U contract, but we didn't trade the U. We traded the M this morning. There's a nice blue arrow there. Nice blue arrow there, and there, and there. So far, every blue arrow on the YM would have gotten you the goal for the day. Every blue arrow would have gotten you the goal for the day. Even that one. I would have stopped out of break even on that one. Probably on that one too, or with a little profit on that one. I would have gotten some profit on that. I would have gotten the goal for the day on that one. But you can see the blue arrows were doing really well this morning. They're doing really well this morning. During the break here, there was 1 during the break that didn't work out, and that's the only one all morning that didn't work out, and that was on the YM. Now that's looking at on the U contract. The M contract was a little bit different. I don't think if I roll this to the M contract, let me just see. If I go back to the M contract, it'll have all the same. I know it's not going to have everything on it, but it might have some of the trades that we took on it. What we did do this morning, we only had a few trades on the YM anyway. One was a +5, one was a +3. That got us to +8, and then there was a break-even trade. Okay, it does have some of the drums. There's the break-even trade, and there's the +5, and there's the +3. So it did everything that I did this morning. Okay, so I guess I can't roll it. You do that for all of them. All right, good news. All right, I'm gonna roll it back to the U. YMU, because we're gonna be trading the U come Monday. Okay. Now I'm gonna roll this back, RTY. I'll put that on the M contract. I'll be able to see everything we did on the RTY today. I did not bring up the question box. I'm gonna bring that up. Some of you guys might have been in the partners meeting last night. We ended the meeting last night by talking about the 30-tick range, TV trades 30-tick range on the NQ. And on the U contract this morning, I traded it, and it was absolutely killing it in the pre-market. All right, so this is what we did on the Russell this morning. We had a break even, then we had another break even, then we had a +10, then +11 to get us to 21, then a +5 to get us to 26, and then we had another +10 somewhere to get us to 36. I don't know where the +10 is. We had another +10 somewhere to get us to 36. During the break, it looks like there was this blue arrow one. The first one really matters right here, because if the first one doesn't give you a higher swing, the second one is meaningless. So you would have been in the trade for the second one. The second one happened. You would have already been in the trade from the first one. I suppose I should say something about that. If you get one and it doesn't go to the point where you would have moved your stop to break even, you can still take the second one. Okay, it's worth noting that. If it doesn't go to the point where you would have moved your stop to break even, you can still take that second one. Okay, we ended up with just +36. +36. Let me see. Okay, pork bellies. Okay. I will do that in just a few minutes. On the ES now, what did we do with the ES? We had just a few trades actually. We had one good, one stop out, and one other one. We gotta go back to the ESM contract for this. Oops, ESM contract for this. All right, here it is, and here are our trades. Well, here's one trade anyway. We started out there with a +2, and I don't see the rest of it, but we started out with a +2, and then we stopped out. We had a -10 that put us at -8 overall, and then we had another +2 that put us at -6 overall. During the break, there were no more blue arrows, just a green arrow here and a green arrow there, both which worked out, and a couple of purple arrows, both worked out as well. One of the things I said this morning, for anybody that wasn't there this morning, there was a question about the purple arrows. If you have a purple arrow and it's in a no trade zone or whatever, what the purple arrow means is the black line is in the right direction. You pull back and hit the BBC, and the outer band is the right thing. It's in the right color. So I didn't say this in the partners meeting or anything last night, but if you pull back to the ribbon and the ribbon is spread like that, those purple arrows seem to work better when the ribbon is spread, even if it's in a no trade zone. Okay. And if the outer bands are not spread, as long as the ribbon's got some spread to it, those purple arrows tend to work out better. All right, just pointing that out for y'all. We discussed that this morning a little bit. Now on the NQ, we got to roll this back to NQ. Go to the M contract. And in a minute here, we're going to get to some other stuff. Be happy to show you here in just a minute. Okay, so on the NQ, it took us a while this morning because I stopped out on this NQ trade. Now I took the first green arrow and that stopped me out. So this is under the second one. It was actually the first one that stopped me out to the tick, and then went and did what it should have done. The next trade I picked up 2 ticks. I can do -18, and the one after that I picked up, it looks like 12 ticks. I'm not gonna break even, another break even. Then I picked up 12 ticks. I got to -6. Then I got 30 ticks on this one. That got me to +24. And then there was one more small trade I did in here. You can see the blue arrows. This one didn't work out, so neither one of those worked out very well. None of them. They were all stop out to the tick, except for that one. That was just a regular stop out. There was one more trade that I took in here that it doesn't look like I marked. That was just a +4 tick. Got me to 28. During the break, there was one there, and that was about it. All right. So it is 1:03. I'm going to jump into the YouTube stream right now. Let me log into that. YouTube stream. Hang on. Here we go. YouTube. And it should be running right here at the top when it loads up. That was me. Hang on. Let's see if and here we go. All right. Watching YouTube stream. There was a couple of things that I wanted to go over. First, let me say, if you have not taken a free trial with us, so go here to mytradingiq.com, click on the purple button right here. It's going to bring you to this registration page. It now has next week's stuff in it. All we ask for is your name, your email, your phone number down at the bottom. If you have Ninja, give us your machine ID, not your Ninja ID, your machine ID. If you have TradingView, give us your username, not your login ID, your username. All right, give us that information. Once you do that, we'll be able to set up your indicators for you. We get them set up for you on your desktop. All right. That. All right. In here, what I wanted to show, a couple of things. I got to put these M contracts back on view, right, before I forget. NQ view. This one would be ES. U. Oops. U. This one will be RTY. U. All right. Now I can save this. So anybody that wants to go out and grab this with everything rolled over, if you want to go and grab this workspace or this layout from the Trading IQ page right here, if you go to the trade rules down here at the bottom, this will be a copy of that right here. If you click on that, your charts will be all updated. All you have to do is make the copy your own. Right? That means up here in the right hand corner, it's going to say the word copy. Click on that and ask you to save it. You have to be able to do that, you have to have plus or above to have 4 charts or more. If you have essential, then you won't be able to do that with that one, but you can click on this one right here. Essential users use this link, and that one is going to bring up this chart, these two charts right here. Okay, the NQ and the ES, just like that. And I've already rolled this for you. Right, I've already rolled it for you, so you have everything the way it's supposed to be in there. All right, now let's get back over here. The things I wanted to show you. One of the things I wanted to show you was this morning with the TV trades. In the pre-market, we had done last night, we were talking, this was on the NQU, is what I was looking at this morning in the pre-market. Oddly, the DOM in the U had less of a spread than the DOM in the M in the pre-market this morning. So I traded the one with the U this morning right through here. I took that trade and that trade this morning, and I ended up with 105 ticks per contract. There's some awesome trades this morning. This is a 30 tick range. So when you get a mid-trend trade like this, your stop needs to be just on the other side of the actual bar that got you into the trade, because these mid-trend trades should happen on the pivot. Okay, and a 30 tick bar, you know, that means you're looking for it to go at least 30 ticks in the opposite direction. So every bar is 150 bucks, right? Every bar is 150 bucks a contract. Just thought that was worth pointing out. We finished the meeting last night talking about this. And I thought it was worth pointing out that it was just rocking it this morning. You know, there were some trades that stopped out. This mid-trend trade here didn't work out, and we actually went through that a little bit last night. You know, how to differentiate between trades that aren't actually in a trend, the mid-trend trades that are not actually in a trend. Now, if you get one of these, it should go down and put in a lower swing. You should be in a trend before we trade in that direction again. If you get one of these, then the next one that does give you an indication is going to be good, more than likely. If you get one of these that does not put in a higher swing, then the mid-trend trade going in that direction is probably not going to work out. If you get one of these that does put in a higher swing like that, then the mid-trend trade is probably going to give you something, and that one did. You see what I mean? We talked about that in the meeting last night, for those of you guys who are using this, and that's on all time frames. You got to take that into consideration. Dwayne's in the background. I think Dwayne's going to say,
try to say
larger time frame.
No, I was going to say, take a look at pork bellies.
Pork bellies. Yeah, let's look that up. I don't know what that is, what that symbol is.
Because I just read an article this morning that said the price of beef has gotten so high that most people going to the grocery store are starting to choose pork, which is less expensive than beef.
Is it? Pork. Huh.
And also, the OJ crops got decimated over the last couple of years. So I went to buy some the other day, and it was like $7, and I go, nah, I can do that. That's not.
It's acidic anyway.
I used to know the symbol for pork bellies. And
PRK, I think. Pork cutout futures is what it's called, I think. And that's what it just.
Michael R says lean hogs.
Lean hogs, okay. Well, we can look at lean hogs. Lean hogs is HE.
Is different than pork bellies.
It is different than pork bellies. Is that what he said?
No, that's what I said.
Oh, okay.
I think they're different. Here's lean hog futures.
Yeah, we're gonna look at lean hog futures, HE. And so the futures themselves, this is on a 30 range. I don't know what the volatility is. Not good for a 30 range. Volatility is way too small. All right. So from this perspective, you have some pretty good indications, but this is starting today on a 4 range. It started out this morning. The lean hogs, their price, does this seem right? I don't know what the
I don't remember what it pays per tick or any of that. I don't remember. We used to look at this stuff occasionally, but we haven't in a long time.
Let me bring up a DOM and see. See if I can figure that out. Hang on. I don't know. That's metals, meats. Here we are, meats, and we're in the H. I don't know if we're supposed to be in the M contract or.
Well, you're on the front month, so.
Yeah, but when I try to do it to bring up a DOM for it, I don't know what that's going to look like. Hang on, let's just see. Currency. I believe it is $10 a tick. It's either $5 or $10 a tick. I think.
What does it look like on a daily chart?
Hang on. Let me get out of this thing that I just did right here. On a daily chart.
Michael R says it's the Q contract.
Okay, it's the Q contract. On daily, look, we had a huge gap down here on a daily chart at the beginning of October. We must have rolled. Yeah.
Well, these
Yeah, July,
these
this is
ag
what it
markets
rolled.
don't trade around the clock.
Right. But these are rolling months right here, I think. Right. There was a big gap there in May, a big gap here between the 13th of February and the 14th of February. Then a few months later in May, big gap right there. And so there's probably one in December here, or October. October, November, December. Huge gaps at the rolling points, it looks like. But from a daily perspective, this is a huge range today. Looks like right here, way bigger than the normal range. You know, if you go back, it's almost engulfed this whole 2-week span right here. Today, if it goes up anymore, if it were to go up anymore, get up above 94, 95, that would engulf the whole last 2 weeks. More than that, all the way back to May 24th.
This thing could be getting ready for a huge run.
Yeah. It's
and now try orange juice.
Orange juice.
I think if you just type in OJ.
Oh yeah, that's right. I can just type it in here. Orange juice. ORENGE.
Orange juice.
Let's just go to futures and see what pops up. We'll go on Eurex. Yes, no ICE. ICE Eurex? I don't know. We'll look at this and see what it says. All right. Well, this is not going to work.
That's pretty spotty.
Yeah, that's not it.
If you go back to, I saw. So where did I saw?
Let me look over here and see if I can find it over here.
If you just put OJ, I think I saw a NASDAQ symbol somewhere. Maybe I didn't.
Frozen
ICE US.
concentrate. Here it is.
Okay.
Here it is, frozen concentrate.
Yeah, in fact, in that article, they were talking about the price of frozen orange juice concentrate for those little cans is up 42% higher than it was a year ago today.
And that's probably up 200% than it was, 2 years before that.
Yeah. So we had a trend sideways consolidation for a long time. Then we caught a rally. Now we're in the retracement leg of that rally. I don't know what time frame you're on. What are you on?
I just switched to a yearly. So it used to be 140, and now it's all the way up to 495.
Oh my goodness! Wow, that could have been a life maker.
Yep. Trump back here, 125. Biden.
Unbelievable.
It's just painful. It's painful to look at.
Okay. Anyway, I just thought it'd be interesting to look at those since I read the article to the audience prior.
Yes.
And Michael R says that OJ is $1.50 a point.
150
now,
a point.
Does a point mean $1 in price?
How many ticks are in a point?
Or does it mean a tick? Yeah, how many ticks are in a point?
Is it a tick? Is it a point like with the YM? 1 point is 1 tick. I don't know that. I've never traded orange juice before in my life.
I've never either. And I warned everyone, it was in the article too, that, apple juice and especially orange juice has extremely high sugar content. So as good as it tastes to, down a cold glass of orange juice on a hot day, it's not so good for people who might get the sugar, as they used to say.
Yeah, the sugar.
You hear about Fred? No, what about Fred? He got the sugar. Oh my God! You got the
sugar. Believe me, I see
my grandfather
every day.
had it.
Sure. Jada's dad has it. He's got it bad.
Does he? Yeah, my grandfather. He would eat like after dinner. He would grab like 2 little Debbies, and my grandmother would just freak out, and he'd go, I'll just take an extra shot. He had to shoot himself with insulin every day.
Oh, okay.
He'd just laugh it off and go, I'll just take an extra shot.
A shot of clear liquor. That's what I was thinking.
No, another shot of insulin.
Yes. Yeah, well, insulin's not cheap now either.
Well, Biden claims he brought it down, but Trump says no, he brought it down.
Yeah. I mean, it's not that expensive compared to other things.
Yeah.
Many other things are wicked expensive, but I mean, like orange juice.
Like orange juice. Yeah, when I saw that $7 price tag on just like, and it wasn't like a huge container, it was just, kind of container I don't know, is it board or, I don't know, whatever it was, it's the kind that you most
Yeah.
normally buy. I saw $7. I'm like, whoa, I'm just going to pass. Plus, it's not that good, it's not, in my family, I have a history of diabetes, so I shouldn't tempt fate and consume too much sugar, so. I justified not buying it for 2 reasons. That was resistance times 2.
Well, there you go. I have issues. Not myself, but I have issues with spoiling Jada. I know she's got sugar, and I know she likes candy.
Mm.
I buy her candy all the time. It's probably a bad thing. It's gonna come back and haunt me someday. But I know it's in her family. Grandmother had it.
It's definitely a hereditary kind of thing. And so my grandfather had it. It skipped my dad. It skipped my brother. So, I should probably have my mind checked periodically.
And there was something wrong with her blood a year ago. I don't know if you remember last year at this time. We stopped at about this time, but in January of last year, she had to go on this diet that was like free of everything. It's like free of sugar, free of gluten, free of everything. And we did that for like 6 months. I did it to support her. Well, kind of to support her. But once we realized after 6 months it hadn't really done all that much to help her blood, we got right back off that wagon with a vengeance. Eating a bundt cake every night.
You got a blue arrow on the NQU over there.
Yep, I see it. I'm actually in it and I'm about to stop out. I just did stop out. Sorry, I didn't bring it over and show you, but I really did stop out on that. But I did see it and I did take it and I did stop out. We're pulling back here on the ES. We might get a bounce here on the ES. We might get a bounce here on the Russell. I am not so sure what the NQ is doing. I kind of want to look at it on the big picture. Let me go over there and look at that big picture view of the NQ. Here we are. This is the Russell. Now the Russell's bouncing off this weekly trading zone. It's just getting above the MA1. It's also getting to the 50% move, 50% retracement of the day's action. So it's got a few things right here that's probably going to keep it down right now. The Russell does. If I blow this up for you, you blow it up. Okay, I'll bring it up. You'll see, maybe a little bit better. I'll blow it up some more. You will see what I'm talking about is we're at the 50% retracement between the 2 weekly trading zones. We're at the 50% retracement on the day's movement pretty much. And we're just getting up above the MA1. It could make it up to the BBC, but I doubt it. If I do another one of these on the day's movement from up here down to here, you see the 50% retracement on the day's movement is right there. This is between the zones. This is the day's movement. So there's a lot of resistance right there, a lot of reason for it to fail.
Guys, Michael's BBC is red, but mine, as you know, is green. It's the same thing. Yes. It's just I just stayed with the old green color. So,
yep.
But it's the same thing.
Tried and true. And in here, my BBC is red and white. It's right here. It's a slow one. The other one is the MA1 in the black stick line. So the NQ, this is the NQ, and I was looking at the NQ to see if we have a reason for it to bounce right here or a reason for it to go down, and it is bouncing off the MA1 right here. It doesn't really have any reason to do anything right now, but it's looking like it's probably going to try to get up to the high of the day again. But really, it doesn't have any reason to do anything.
Could try to tag the high of that white candle that was sticking up there.
Yeah, well, right up here, I think this high right here at 929.
Yeah, that's probably it.
Yeah, I think that's it. And
no, because that was a 30-minute candle, so it'd be way further back.
Well, we're also looking at the U contract here.
Oh yeah, that's a difference too.
That was the M contract. So there's a little bit of difference between these charts and those charts. And any trades I take right now that I just took, like this one here, I took that on the wrong contract on my DOM. I can't believe that's the first time I screwed that up today. But I did stop out on that. I didn't have time to bring it over to you. Maybe you guys would have corrected me if I'd have brought it over and shown it to you. But I really did stop out. Just so you know, when I see a trade trigger, if it pulls back against the better entry, if it pulls back against the proper entry and it hasn't gone far enough into profit to hit the target, to hit the break even button yet, and the DOM looks like this, I don't go down and look for the price down here. I don't even look at the price. I just click right here in the green, and that puts on a limit order at the current bid. If I know I'm getting a better price than what I would have gotten, that's how I didn't notice that was the M contract and it wasn't anywhere near the right price. Because this is at 921 and this is at, it's the NQ. Yeah, this is at 921. This is at 962. They both stopped out, I'm sure. Well, this one probably, if I go to the M, you probably didn't even have a trade on the M. Let's look. I had a green arrow right there, but they both stopped out. I would have run that to break even though. This is 657. Yeah, so that's basically the same thing. Yeah, if I see an opportunity to get a better price, I don't look at the DOM to see, to pick out a better price. I just drop it at the bid and it gets me in the market at the current bid. I don't know if you guys know that. If you drop it right here, it's going to put you in all the way down there. Why aren't you guys consistent in your line colors? Make it easy on you. Well, in the room, I always keep it the same, right? In the room, the reason Dwayne works on a 30-minute chart, and I don't typically work on a 30-minute chart. I mean, you know that. In here, and when I have a smaller time frame chart brought up with DT Pro, I use the same colors that I use in here. But DT Pro, I don't use the black line, I don't think. Do I? Let me go look. When I'm using, hang on, that's not it. Here it is. When I'm using this chart right here, yes, even in my ribbon, I don't have a black line in the ribbon. I could make that lower line the black line, but when we created it here for DT Pro, having all 4 lines be blue was the key. All right, we didn't need the black line to have the functionality that it has in this. In here, we just had to be able to see it. Over here, not only do we have to be able to see it, we have to know if it touches it or not. Okay, that's why, Steven.
And once we came out with the ribbon, I just went in and got rid of the additional lines and made my BBC green as it had been for many, many years, because that's just what I'm used to seeing, and because I have the ability to do that. And you have the same ability. You can make yours green, you can make it purple, you can make it any color you want. You just got to go into the properties.
Yep. And whenever I create something, I always try to give you guys that ability, the ability to change the colors of things, because some people are colorblind and they don't see the same colors I see at all. And, I know that's I keep wanting to place. I'm not going to place any trades there because I keep wanting to place. Like for the ES, I just went over to place a trade to put buy stop limit order on 2 points above the bottom of the bar, and I'm not even anywhere near the same numbers. I should be putting that buy stop limit order on at 95.50, and right now on the ES, I'm nowhere near 95.50. See, if I'm putting a limit order on, then I'm going to look for the price. But if I'm able to get into it at a better price, I could just drop it right here and it'll pump me right in right there at 31. Okay, but this up close right here is going to be a trade. I'm not going to take it, but it's going to be a trade. Just going sideways here, and sideways there. Okay. I just had a thought. Well, anyway. This right here, it may not be a trade now. If this bar closes down, everything may just turn down. These other ones are getting pretty weak right here and are all starting to turn down. So it may not end up with the trade at all in there. Let me go over here. Let's see this. All right, so we want to see an up close here still. It hasn't not given the up close. I mean, it's haven't turned away yet, so it's got the potential for a trade still. The NQC is just kind of getting sideways, even more sideways here. It started to go down, now it's starting to go up. So we don't really have much to go with. There's the up close, and that's a blue arrow. That should make it up to the prior swing high, which is right up here. Now, let me roll my DOM. All right, I'm gonna have to roll my DOMs anyway. Let me just close all these DOMs that I have open and roll all my DOMs. I should have just done that anyway. Hold it. Hold it. U. There's that one. This one. I'll roll it to the U. There's that one. The NQ. Roll it to the U. And there's that one. And the YM. Roll it to the U. And there's that one. Okay. So on the ES right now, put my strategy on. Strategy's not working. Okay. Guess when I rolled it, oh, here they are. So if I put that on, can I still place an order? Nope, it's still broken for me. Anyway, in the DOM, it's saying right here, 54.99 is where it wants to go to, 54.99. And that is right there, happens to be the swing high, so that's perfect. Right, that was part of today's lesson plan. We were able to do one of those today where it worked out perfectly. I don't remember, I think it was the Russell. We were able to go through all that step by step. That would be a pretty good thing. Val, I don't know if she's not in here, but if she was in here, that part that I did today, it was around 11 or maybe 10:55 to 11:15. That'd be a good piece to take out. I was able to go through that part of the training with the DOM. I guess I did the whole DOM training today in like 15 minutes because I wasn't able to do it yesterday. All right. Well, I don't know, guys. Looks like I'm going to wrap it up here. We're just about done, and this has got to get up here to exceed the prior swing high. Hasn't quite exceeded it yet. If I did take the trade, I'd have gotten out at a little profit or break even. It did move 8 ticks into profit there. So I'd have probably taken a couple of ticks on that if I did take the trade. All right. And so I guess with that, well, we're 20 seconds early, but we can still pass it out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Today, hang on a second. Today it took 40 minutes and 12 trades to get to $2,700.
Good job.
Thank you. Thank you.
Okay, guys, we'll pick up where we left off. We had gotten to gold. Okay. Here's where we opened last night. Price was trapped. We had support below, blue and climbing, resistance above. And then it got pinched up, and the buyers won the skirmish. Not the war, but the skirmish. And we rode the back of blue and climbing and the step line right up to the target and the weekly zone. And we consolidated for an hour and a half. That's what happens 70% of the time. And then Buyers came in again and pushed us all the way up to this high created 2 days ago. Right there. This is Friday, this is Thursday, this is Wednesday. So we got a high, we got a lower high, a lower high or lower high. Now we've overcome red and falling, but watch this area for potential resistance, watch this area for potential resistance, and then watch this area and this area for potential resistance. See, on your range chart, you can't see all this back here. That's why it's important that you learn to use a 30-minute chart or some larger time frame, okay, where you can see multiple days. So you know where major resistance is. You know where major support is. That kind of thing, okay? Now, if price can get above this, then here, go look left, but make sure there's no other obstacles, and you have a nice run into that zone. So we never had any reason to really trade with a short target, but we had great reason to trade for the long target. Price, step line, blue and climbing, BBC, boom. Little retracement, pullback held at the BBC, at blue and climbing, and gave us that next leg. That resistance sent us back to the BBC support. And that support has now sent the market looking for resistance. Could be there, could be there, be there, could be there. Okay, silver. Silver opened kind of similar. Got blue and climbing as support, BBC is resistance. You get above it, but you never pull away. You get below it, but you don't take out these lows. And so it's just consolidation at the BBC until we finally break these highs right here. And so we get a leg up. Plenty to get your goal for the day. It only takes 2 pennies. Then a retracement. When the price of silver moves 2 pennies, that's your goal for the day. When it moves $1, which it's done a lot lately, it's $5,000 contract traded. So we ran into resistance here, sent us back to support at the BBC, and that gave us a rally up to 29.53 and a half. No, 29. Hang on, 29. Yeah, 53 and a half. So we didn't quite make it to the target. But again, just this candle right here. Opened at 29.42 and ran up to 29.49. At 7 pennies, that's $350 per contract traded in that one little green candle. And last but not least, the euro. We opened below the BBC. We've stayed below the BBC, so there was never any reason to think about the long target. We had support. Price was trapped. Resistance overhead, support below. Then blue and climbing turned to red and falling as price got below that indicator. And then spent 2 candles at the zone. And we dropped right to the target. Then we traded through the target. And way back over here, we found some support, which bounced us. And see, this high is that high. Right there. That set us back down. And way over here, we found some more support. Support will always send the market looking for resistance, which we've had at the BBC for 1, 2 hours. And so far, the pullback is still holding, okay? We've spiked it. We got blue and climbing below us. I would venture a guess that The euro is going to make a run at the weekly zone, but it's got to overcome this swing high right here first. Right there. See, it got real close and failed. And now you got a green candle printing. If it can overcome this high, and it needs to overcome that high, that high, that high, and you're back to the zone. One last look at the daily chart. Now again, when we go live Sunday night, all of the indices and the euro will be on the U contract. This is your last look at the M. So we'll have to do some adjustments because right now, if I just change this to ESU, see it's different. I'm going to have to bring the low fib up to here. And the top fib, I'm going to have to bring up to here. My fib extensions, I'll have to change those too. But we'll do that all together Monday during the afternoon broadcast so that you can follow along step by step to make sure you have your chart set up exactly the same. And I'm just going to leave that on you for now. So Sunday night, I don't forget. Okay. All right. Oh, wait, I got a mentoring session, so I better leave. I guess I got to leave it on M for now. Yes. And see on the M contract today, we've traded 1.2 million contracts. So there's still plenty of volume in the M contract. That little right there. 1.274 million. 1.275. And price is higher than it was at the beginning of the broadcast. And remember, we had that red body, and it keeps shrinking, showing more and more wick. Okay, is this thing going to make a rally into the close? I don't know. Could be a head fake. Be careful. We're approaching this bearish cross right here. Okay, you see that? That's potential resistance, at least the first time up. And that's at roughly 54.36/37. If we get through that, then you got potential resistance at the high of the session, which the high of the session is this high from yesterday. See that? And then the target is this high right here. The only holy grail in trading is learning how to trade. And to learn how to trade, you got to learn how to read the chart and understand what the market is telling you. You got to learn to read it like a newspaper. Just open it up every morning and go, okay, all right, I see what happened here. Okay, the next high probability move is this. And over 306 weeks, 16,900 plus alerts, we've shown that our best work, our best analysis, 20% of the time the market does something different than what we anticipate it's going to do. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. Hang on for me 1 second. I've got to send a message. Just bear with me. Okay. All right. 9 out of 10 new traders fail because they don't have someone Nine out of 10 new traders fail because they don't have someone to teach them how to trade. The only holy grail in trading, and I know the internet tells you there's a million, there's one: learning how to trade. And that's what we do. We do our best to teach you in a live environment how to trade. Along with 2 hours of group training every day, you get one-on-one private mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you also get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You're able to attend a Thursday night members only workshop, all that and much more. Plus, you get the golden key that opens the private channels in Telegram. Okay? Everything a trader needs, all under one roof, one low price. Okay, let's wrap this week up with our good word for the day and the week. Steps to overcoming your worries. In Job 42:2, we read, I know that you can do all things. That's Job talking to God, not his buddies. Job lost his wealth, his health, and his children. The book he wrote is a conversation between himself and God. At the beginning of it, Job says, hear now my reason. He is asking, why has all this happened to me? At this point, he is totally self-focused. But by the middle of his book, Job has grown spiritually. And now he takes a different approach. Instead of reasoning, he decides to stand on God's word. Job 23:10 through 12 says, but he knows the way that I take when he has tested me. I shall come forth as gold. My feet have closely followed his steps. I have kept to his way without turning aside. I have not departed from the commands of his lips. I have treasured the words of his mouth more than my daily bread. By the last chapter of his book, Job has decided to trust God completely. In Job 42:2, we read, I know that you can do all things. No purpose of yours can be thwarted. My ears had heard of you, but now my eyes have seen you. Job has finally arrived at the place where he can say, I trust God. There's no need to worry. After 9 months of worrying, questioning, and reasoning, he decides he doesn't need answers to all his questions. He only needs to know that God cares for him. And his story ends in these words, the Lord restored his fortunes and gave him twice as much as he had before. So, there you have it. The steps to overcoming whatever it is you're worried about. The book of Job. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.